Good morning, everybody. It's Monday, January 13th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up 2.5 at 473. March soybeans were up 2 at 1027 and a quarter, and March Chicago wheat was up 5.5 at 536 and a quarter. This morning, the USDA had an export sales announcement of 198,000 metric tons of soybeans to China for 24. Good morning, guys. Hope everybody had a nice weekend. Certainly a lot to digest over the weekend, given Friday's USDA report really changed the narrative as we go forward here in a lot of ways. Justin, maybe a few thoughts as you chewed on it over the weekend, and then we'll throw it around the room.
Yeah, thanks, Dan. I think, we obviously talked about this Friday, kind of our initial reactions, but yeah, I think you have to look at this as, kind of changing the underlying fundamentals to a decent degree, actually. Corn, we've talked about, Dustin's done a good job of talking about this. If you look at the world corn numbers, excluding China, already starting in a tight position. And I think this report makes it, kind of in the starting to get to the uncomfortable level. And, we're still at pretty cheap prices, considering everything from money supply to, inflation that's going on. Any metric that you look at, corn's pretty cheap for such a potentially, tight fundamentals. I think you have to take the government numbers for what they are. The cash market, the spreads. There's been lots of things that have been kind of, odd considering how big of a crop we were supposedly had. Now maybe things make a little bit more sense for kind of the price action. The corn's been acting good for months and months now. I think this kind of just justifies that move, and now it starts putting a lot of impetus on growing a really big safrinha crop. We have really big South American numbers written down to get to those tight world balance sheets. So any hiccup, I mean, if you look at it's safrinha crop and our new crop corn, is the biggest crop the biggest crops by far, to make those balance sheets that tight. So if you start running into any issues in either one of those, I think we said on Friday what were 2012 type levels for stocks to use, and those were $6-7 corn environments. And I'm not saying that's where we're going by any means, but there's certain, we've built in a lot of potential energy. I'll put it that way. So there's just a lot of risk if we don't grow some good crops.
Yeah, and I think you've made a good point on Friday as well, Justin. I think it's worth mentioning that it poses a question for where you start for 25 as well. I mean, by all accounts, we had a fantastic growing season for a majority of really important areas of the Corn Belt, and we still couldn't tap that 180 plus type level.
Yeah, right, and we saw some massive crops. I mean, we had a record crop on our farm. A lot of Illinois customers had record crops. I will say it's the third or fourth year in a row where we just didn't finish great, and you took bushels off the end. But that just goes to show what it takes to grow a record national crop. It's good. It's good conditions all the way throughout. So we had a fantastic planting. We had good emergence. We had really good timely rains. We had one of the worst droughts. I'll call it second half of August into September. Just a huge drought that if it would have happened, 30, 45 days earlier, probably would have been a 2012 type scenario. So we did have some, kind of bad finishing weather, but that's, that's why record crops are record crops. It takes, you need a lot of things to go right to make that happen. And I think maybe we got into a scenario where, cheap prices, I think convincing ourselves that we can grow a record crop kind of no matter what. And maybe we start rethinking that a little bit as we head into this planting window this spring, that, hey, maybe we do need to put a little bit of, or decent amount even premium back in these markets. The beans have been kind of the elephant in the room, this burdensome thing as well, right? With, big South American crops, which those are, I think we are still going to get those big South American crops. I think that's, right. We already talked about this. We're already starting to harvest in Brazil. So that beans are still going to be the weakest link, but you just made them more interesting. And by making them more interesting and corn very interesting, I think it's a good scenario for us all.
Yeah, no, that's exactly right. Ben, what's on your mind as we start the week?
Yeah, I think we consolidated before that final report, right below kind of the breakout when we broke down back in the summer, and the market came through, and I think you see the beginnings of a technical shift on a longer term time frame. Maybe over the next few months. Certainly, the fundamental makeup has changed. We're still quite a bit below 5-year average prices in corn with a slightly compelling story now. So I think that is encouraging. It doesn't mean that we can't have a black swan type of event that would send us into a risk off type of spiral. But I think that we embolden the managed money long. I would not be surprised to see them take some profits at some point, but I don't think they're likely to full scale part with their position based on something going on in the grains. I think it would have to be political or an outlier event, like Fukushima, something like that comes to mind. So I think they're sitting pretty happy right now, and there's a lot that's got to take place over the next few months before you can really threaten the next round of corn supply. The one thing on the reports I think is a little bit hard to digest is, we saw this reduction in corn and bean yields. We still had a record corn yield, and when you look at that with the timing of the weather, I think I'm a little bit shocked that it didn't hurt beans more. For anyone that was around in 2003, we had similar weather and it wasn't as hot this time around. That was a catastrophic finish to a soybean crop, and at least on paper today, there wasn't nearly as harsh on those crops. So,
yeah, I will say, just putting our farm in there, we did get some timely August rains, so we had some 90 plus bushel beans, but the potential was there for record breaking in beans. So I do think we took quite a bit off the bean crop and corn crop, mostly beans, but it was from some gigantic number. So I think the threat was really there if we would have finished August off to have some numbers that we weren't ready for. So I agree with you, Ben. I think we might have been looking at a 55 type national crop, to be honest with you.
So yeah, I'm excited for the next the next 6 months. I think that we're going to trade. I think we're going to have a little more movement. An old trader adage is that you want to be long volatility when managed money's long premium, and you want to be short it when they're short. And we haven't seen vol really perk up that much yet. So I think markets are going to be a little bit more fun here for a little while.
Yeah, I agree.
Kyle mentions too, where it's a lot more fun to listen now that we're got a little bit of friendliness in the market. So it was, Kyle, it's funny you mentioned that our viewership over the weekend was massively increased from Friday. So
yeah,
you're just bringing the goods, man. That's all we could do. Dustin, anything to wrap up on grains here this morning? Thoughts that you might have?
No, I think you guys covered everything pretty good. I think the implications for future production should be, watched closely. I mean, are we really going to come in and write down a 183 number on the May WASDE report for 2025 crop corn after another year of failing 180? I know we had some dryness there at the end of the season, and that might have taken the edge off of corn. What are we going to imply though going forward when we simply can't break the 180 number? Are we going to just continue to rise along that trend line yield? I think the linear trend line yield going back to 2000 is around 182.3. So we'll have to watch that in May. It won't come out to the May WASDE. I think still want to play devil's advocate a little bit about, where risk lies. I think between now and March 1st, risk goes down quite a bit as we get into the month of Feb, and growers have the option to buy up some of these higher level policies this year. So just kind of keep that in mind for the next 30 days. It's just, something weird happens in the stock market or the dollar index or the Brazilian real. That's something to kind of just watch out for. We're about 5% off the all-time highs for the S&P 500 right now, and the long-term rates continue to rise. Any weird thing that happens there would probably be another just area of risk that we might have to keep in the back of our mind too. So
very good. Ryan, we got a couple of minutes here. Saw that cattle slaughter and pork slaughter were both up on the week last week. We're still kind of chasing last year's numbers, but what are your thoughts here as we begin the week?
Yeah, it just cattle market is just knocking on the door of contract highs. I mean, it's still here. I think you got a little bit of kind of bullish sentiment with the weather, but plus, you're seeing $2 to 201 trade late on Friday in the South. I mean, this is $4 to 5 higher up from the previous week. So it feels like there really isn't any bad news right now, as we kind of keep on stating, and things are still relatively tight here. But, as we kind of been talking about, with the cattle on feed report coming up, with the inventory report coming up, there's definitely some risk here, kind of longer term risk. So I think overall, just we want to really kind of nail down trade day to day, but eventually I think some of the, those numbers could change things. Overall, it still just seems like Packers are going to have to pay up. Wouldn't be surprised to see some of the production numbers start to kind of slow down here as these Packers continue to pay up. So we'll see. I mean, I think the weather is a big part of this, though, and if that starts to dissipate, maybe things can level off a little bit. But here we are again. It feels like you can either break out or break down from here at some point, but we just really haven't had any news to really challenge the market here for the most part on the cattle side of things. So still looking at the weather, still looking at how things are shaping up, how the board's going to react, but overall it's still pretty friendly here. And on the hog side of things, we've gotten this little bounce back. It's been a couple of days up. Maybe you got a little bit of kind of technical support after hitting some of those longer term moving averages. The trade's still long here. So there could be some good opportunity. Generally speaking, the cutout cash been starting to firm up a little bit here. So we are starting to see things pick up a little bit. So I think just kind of watching those fundamentals, seeing if the weather's going to make any impact here, or if there's going to be any surprises around the corner from any kind of legislation, or at least new tariff proposals or anything like that. I think that's kind of the risk right now, but it feels like we traded a lot of that bad sentiment. Funds have reduced their position pretty considerably. So now maybe we're just kind of looking for a range to kind of normalize.
I appreciate the update there. We'll be sure to bring everybody up to speed on anything that changes there, certainly in the livestock deal as well. Appreciate everybody that tunes in on a daily basis. Go ahead and throw us a like and subscribe. It'll keep you up to speed on everything AgYield, certainly when we put special content out, things of that nature. So again, thanks to everybody that supports the show and tunes in every day. We're doing the show every day that the markets are open, streaming live on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments there this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.